An American initiative to catch their tax dodgers could prove costly for Jamaican financial institutions, and there's apparently no way to avoid it. Well, unless, of course, if local institutions do not volunteer to participate and thus face punitive charges. We have a special report in Your Wealth. Jamaicans better get accustomed to the acronym Fatca. It stands for Foreign Account Tax Compliance Act, an ingenious American legislation to catch its citizens who are dodging taxes by using accounts in other jurisdictions. It will have major implications for Jamaican financial institutions, Jamaican green card holders and dual citizens, and thus Jamaica's Finance Minister Peter Phillips has asked the regulatory agents of the Bank of Jamaica to carry out a risk assessment of the banks and other financial institutions it regulates to determine their state of readiness. Fatca will not only impact on the banking sector, and so on Tuesday, June 19, the Financial Services Commission, which regulates the Jamaican securities sector, held an interesting public forum to examine the implications for users in the pension, insurance, and securities industry here. Now, Fatca will not only impact on the activities of American citizens here. Acting Executive Director of the FSC, Leon Anderson, underscored the fact that Jamaican financial institutions conduct significant volumes of business with Jamaican green card holders or dual citizens, for example.
For payments made after December 31st, 2012, Fatca will require foreign financial institutions, which encompass securities dealers, insurance companies, and probably pension plans, to provide certain information on an annual basis to the United States Treasury, the Inland Revenue Service, with respect to accounts held by certain U.S. investors.
Anderson says Fatca requires foreign financial institutions to perform 4 main tasks, including identifying whether a new customer is a U.S. or non-U.S. person and to review for U.S. ties.
You have to decide whether a new customer is a U.S. person or a non-U.S. person, and to review for U.S. indicia, in other words, whether the person is a resident and so on, what attachment they have to the United States. Then they have to identify existing customers by searching their records for indicia of United States ownership and for de minimis exemption options, which is at the moment set at 50,000. So if you have earnings of 50,000 or investment of 50,000 or less, then it might not apply to you. Report annually on all non-exempt U.S. persons.
The FSC's acting executive director emphasizes the point that local regulated entities will have to get familiar with Fatca.
Regulated entities will need to understand the intricacies of Fatca. And customers of regulated entities will need to understand the intricacies of Fatca and why you are required, and why the institutions are required to report on your financial business with them. And so this is why you're here this evening. This is why we invite you here to explain to you what Fatca is, why the financial institutions may have no option but to comply. And this compliance will involve you, will involve your support. You might have to give them permission to give to a third party confidential information. For the banks, and I'm sure that most, if not all of us, are clients of banks. The banks will have to give information on your account. there's a confidential relationship between a custom and a bank, but Fatca will more or less override this. Now, there is a legal requirement that transaction between a bank and its client should be kept confidential. And so the Bank of Jamaica, with the Bankers Association and other deposit-taking institutions, will have to work out a way of allowing the banks to, or the other financial institutions to give this information. For the securities dealers, insurance companies, and so on, the restriction is not there. There's nothing in the legislation that requires this confidential relationship. And so, unless it is in contract, the contract between, say, a securities dealer and the investor, that the securities dealer may not disclose this confidential information, then the securities dealer is not so bound. They may be able to do that. But then again, it is not something that is regularly done. The securities dealer, the insurer, will not give private information to a third party. But on a Fatca, they'll be left with no choice. There are penalties, and this is why I say the room for non-compliance with Fatca is very, very narrow, if it exists at all.
Speaking at the same public function, Lawrence Lewis, a partner at Deloitte, Bahamas, underscored the punitive side of Fatca.
If you want to play in the U.S. market as a financial institution, we're going to require you, or we will ask you, to voluntarily sign up for an agreement, voluntarily, sign up for that agreement, which says that you will go through and identify any U.S. persons and account holders that you have within your customer base, and you will report those persons and assets that they hold up to the IRS. And you know, it's all voluntary. So if you choose not to participate, not to become what's called a participating foreign financial institution, a participating FFI, then no problem, you're not required to participate. However, if you want to have access to the U.S. market and you're not participating, we will charge you a 30% withholding tax. And they call it a tax, but it's really sort of a punitive measure. So we will withhold 30% on any income that you have sourced from U.S. sources. So if it's you know, an IBM stock, we'll tax 30% of the dividends, regardless of whether or not you're entitled to have some double tax treaty relief and so forth. We don't care. We're taxing 30% on that, as well as we will tax 30% on the gross proceeds of when you actually liquidate that investment.
There's no escape from Fatca by using third parties.
We'll create this web of participating institutions. So if you're not a participating institution, if you're not a part of the Fatca arrangement, even if you went to a global bank that was, you know, based in the UK and tried to access U.S. assets through that bank, we will still hit you with that 30% withholding. And by the way, we'll ask Global Bank ABC that's in the UK to actually do that withholding from you. So very quickly, they created this, this web, or the sense of a web, where financial institutions have come to an understanding that whether we're directly accessing the U.S. markets, or we are tangentially involved, or we just want to participate in the global marketplace, we are likely going to have to be Fatca compliant.
Compliance with Fatca is important to business partnerships.
And from a commercial standpoint, We've heard anecdotally that some of the global institutions are starting to say to other organizations, what are your intentions in terms of being Fatca compliant? If you're not intending on being compliant, we will not continue to do business with you because we just do not want to carry that risk.
Of importance, too, is the fact that the Foreign Account Tax Compliance Act is already law in the United States, and thus the outcome of the upcoming presidential elections offers no hope of repeal. Jamaican institutions will have to make serious and costly adjustments to their systems.
Institutions would likely have to make some changes to what's called the client onboarding, what we're referring to as client onboarding. So their process for accepting new clients. What documentation do they need to gather up? What questions they have to ask? More than likely, I understand there have been improvements to your AML and KYC processes. More than likely, most of it will rely on that existing process. However, for new accounts, if there's any U.S. indicia that gets identified, it'll go through that same process. Well, before we actually open this account, we need to determine one way or the next if this is a U.S. person or not, and whether or not we can in fact report on it if it is a U.S. person. Most organizations are going to need some level of technology investment to be able to support it. There will be some compliance issues, and I talked a little bit about that concept of expanded affiliated group. Well, as you start to think that organizations may exist across jurisdictions, then trying to marry and manage that entire process through multiple jurisdictions where you may have different legal environments, different regulatory environments, could be quite challenging for any multi-jurisdictional organization. And then, certainly 400 pages of tax guidance. That's a lot for any organization to absorb. So clearly there will be a level of effort that they will have to spend in terms of understanding Fatca, understanding what it means for them, how they would then need to implement it.
The Americans will not only target larger countries as they seek to snare their tax dodgers, but smaller rogue countries as well.
Larger countries and those that are more prone to being utilized for tax evasion, and then prioritize down from that list in terms of negotiating these arrangements. So the timing and the likelihood of Jamaica or anyone else within the Caribbean being involved in it is uncertain at this point.
Those watching this program should understand that under Fatca, only identified U.S. persons will be liable to pay U.S. taxes and face the punitive actions contained in the American Foreign Account Tax Compliance Act, a real game changer. For Your Wealth, I'm Owen James. How are